Tipping is bribing. Why the practice must end. The act of leaving a tip, that seemingly innocuous extra payment for service at a restaurant, hotel, or salon, is a cultural fixture, often viewed as a gesture of generosity or appreciation. However, a deeper examination reveals that this practice is fundamentally flawed, undermines the principles of a fair market, and serves as a dangerous gateway to a culture of bribery and unaccountable finance. It is high time that tipping is recognized for the corrosive practice it is and made illegal. Undermining fair service and standard rates. The core of a functioning marketplace is the principle of standardized rates. When you purchase a good or service, the price is clearly defined. This ensures that every customer receives the same product or level of service for the same cost, promoting fair supply and equal service for all. Tipping shatters this essential parity. Because it has no standard rates, the amount is arbitrary and often disproportionate. This encourages staff to offer partial preference, better, faster, or more attentive service, to those they expect will tip generously, or to those who have tipped well in the past. In effect, the tip becomes a preemptive or retrospective payment to secure a superior, non-standard level of service. This is not appreciation, it is a payment for preferential treatment, a dynamic that is uncomfortably close to a bribe. The slippery slope to a bribe culture. The cycle of tipping establishes a harmful expectation. Once a person pays a tip, the service provider begins to expect money every time. The service is no longer a standard transaction but a negotiation, implied or explicit, where the quality of the service is tied to an extra, non-mandatory payment. This normalization of extra payment for basic or expected service is a stepping stone to a bribe culture. A bribe, at its heart, is a payment made to influence a person to act in a way that is favorable to the payer. While tipping may not involve an illegal act, it shares the same underlying mechanism, using personal payment to buy a better outcome than what is standard or legally mandated. By legitimizing this small-scale transactional influence, tipping paves the way for a broader societal acceptance of using money to gain an advantage, eroding public trust in fair processes. The black money conundrum. Beyond the ethical and market fairness concerns, tipping poses a serious challenge to national finance and transparency. Tipping is overwhelmingly conducted in untraceable cash. These undeclared, off-the-books transactions contribute significantly to the circulation of black money. This shadow economy weakens the tax base, reduces government revenue, and makes it harder for regulatory bodies to track the true flow of wealth within the service sector. When a substantial portion of income in an industry is deliberately kept invisible, it creates a loophole that can be exploited for larger illicit financial activities. The way forward: financial regulation. Recognizing these profound issues, the Finance Department is reportedly working on a comprehensive solution to decisively end this tipping culture. The goal is not to hurt service staff, but to transition to a transparent, ethical, and legally sound compensation model. The ultimate solution lies in mandating that all goods and services be offered at a single, all-inclusive, and legally published rate. Wages for service staff must be structured to be fair, competitive, and sufficient without reliance on the customer's arbitrary gratuity. By integrating the full cost of fair labor into the advertised price, we restore integrity to the transaction, ensure equal service for every citizen, and cut off a major source of black money. Circulation. Tipping is an archaic, unfair, and damaging practice. For the sake of market fairness, financial transparency, and a society free from the subtle pressures of bribery, it must be outlawed.